Hello trade pros. In today's video, I'm going to talk to you about the trailing stop and how you could use this tool to help you lock profits on the way up and how it's commonly misused by newer traders. Let's jump right into this video. The trailing stop is an order that you move up as the price of a market goes up. The idea here is that as price is going up, you stay in the position and make more money. However, if it takes an adverse move against you, you're protecting your profit and securing a minimal amount of profit on the way up. In theory, it means you're gonna make a ton of money as long as price is moving up. But as soon as it turns down, you're gonna get out of the position and get paid. So here's the idea. Stock prices are moving up, and this could be a stock, it could be a commodity, a future currency, anything that you're trading. It's starting to move up and your initial trade is here. At the point of entry on this trade, you decide that your stop loss should be placed below. However, as prices start to move up, you're gonna start to think, hey, at some point I need to get paid and make a return on this trade. So what you're looking to do is to establish a level at which you're gonna move your stop loss to and say, if price drops back to this level, I'm gonna get out and secure my profit, which is the difference between my entry and where my stop loss was. Now here's the issue with this thinking and this approach. When you're using a trailing stop, it's the fact that you're always gonna be getting paid less than you had previously. So you're never gonna actually be exiting at the point at which your trade is the most profitable. And this is where a lot of traders struggle with it, and it affects their trading psychology. And you're creating an automated exit approach. The problem with that is, as a new trader, you need to be in control of the exit process. This is the most vital part of the trade, because at the exit is when you actually realize either your profit or loss. So one thing you can do as a new trader is to ditch the trailing stop to begin with. Your goal at the beginning is to make small, consistent returns and control the entire process. So find your entry and have an initial stop loss, but as price goes up, take a profit. On the S&P 500, we use a 5-tick stop, which means 1.25 points, with the goal of getting just 8 ticks or 2 points on the S&P 500. Now you might be thinking, hey, what's 2 points gonna do for me? I need to pay my bills. However, before you make 10 points, 9, 8, 7 points, and anything above 2, you have to take 2 points every time. Every single time you get a 10-point move, you've had the opportunity to lock in a profit at a 2-point move. But what happens if you go up 6 points and then the market drops and takes you out of your position? What you're left with is a trade that was profitable that turned into a loser. And that's very damaging to your trading psychology. The goal of traders is to get paid. And the question I ask a lot of our team members is, if you're not getting paid when you do have a profit, when will you get paid? So here's the process. At the beginning, establish a small move that you're looking to capture. When you get to that move, exit that trade manually, go ahead, get paid, and take your profit. What's gonna happen is, as you take small, consistent profits, you're then gonna follow the market afterwards and know how much further you could have extended this profit target. By taking a profit first, you're getting paid to learn, and then you switch and watch the market from the sidelines. When you're not in an actual trade, this is also your peak learning potential, because you don't have a bias. You don't need the market to go anywhere. Now you're just observing and seeing what is happening rather than looking for what you want to happen. Very big difference. Once you hit a consistent level of taking 8 ticks on the S&P 500, or a smaller target, if it's currencies, maybe it's 6 to 7 pips. If you're trading stocks, depending on the volatility, maybe that looks like 10 to 20 cents. But take small winners consistently and exit manually before you start implementing the trailing stop. So this is the focus of this video and the takeaway. Ditch the trailing stop at the beginning and get consistent on taking small winners on a daily basis. Get used to getting paid and walking away green for the day. This will really build up your confidence in your analysis and your execution. And in the meantime, you're gonna be watching the market and getting paid to learn. Once you know the average moves and you're synced up and you feel comfortable with the product you're trading, you're gonna know where you could have a reasonable target, and you're gonna know when to trail your stops. But that's not all. I'm gonna give you a quick little strategy to help you get there. I call this strategy the half and half. So here's what you do. Step number 1 is the same as always. You pick a low risk, high probability entry opportunity, and you establish a stop loss right from the beginning. So here's the stop. and our entry opportunity right above. Now, we know that we have an automated profit target that we're gonna take on the way up. So let's assume the S&P 500 goes up 8 ticks and hits our profit target. The half and half strategy works like this. What you do is you sell half of your position at the initial profit target. So you're taking half out of the market, and now you've gotten paid. You've been compensated for the risk you've taken. You've had a successful trade, and no matter what happens, this trade's gonna be green. Now you're in the position where you're sitting and you're managing open profit with zero risk. This is an optimal place to learn from and also let your profits run. So now that we've exited half the position, what we start doing with the other half is then trailing the stop loss. And we continue to move that stop loss up until we get to about the average profit target that we've been noticing and observing through the previous exercise. In this way, you're taking half out at the small gain and you're putting yourself in a position to be able to make more money with less risk and put a winning trade on your journal and also build up your trading psychology and confidence. Because at the end of the day, it's not about making millions by next week. It's about being consistent, and from there, increasing your size, exposure, and the average points that you take from the market as you increase your confidence, knowledge, and quite frankly, your screen time. So focus on small wins and build a strong foundation to let your profits run. I hope you found this video useful. Like this video if you liked it, and click subscribe. And when you do, be sure to hit the notifications bell so you receive updates for every video. If you want to get access to our 6-lesson mini course, click right here and get started right away. Thank you for tuning in. Have yourself a great day, manage your risk, and trade like a trade pro. Goodbye.